Welcome back, everybody, to another deep dive. This time, we're going to kind of step back in time a little bit.
Oh, cool.
Yeah, to the early 1900s Wall Street,
Oh.
and kind of dig into some excerpts that we found from this book that we came across. It's written by an actual trader from that era, and it's really fascinating stuff. It's not like, some dry textbook or anything like that. It reads more like a personal journal almost.
Oh, okay.
Where he's really laying it all out there.
Yeah.
His wins, his losses, his whole philosophy on the market. I'm really hoping that, what we can pull out of this deep dive is some practical wisdom, some of those like evergreen insights about speculation and human nature and stuff that's just as relevant to, us in 2025 as it was back then.
Well, that's what I think makes those kinds of sources so fascinating, because the markets may change, technology evolves, but people stay the same.
Right.
That underlying psychology, the greed and the fear.
Those are constants.
Absolutely. And speaking of human psychology, this trader story actually starts off with a pretty hard-hitting lesson.
Oh.
He ends up losing millions because he basically blindly trusts this analysis that a friend gives him.
Wow.
And what I thought was so interesting about this was that this particular trader, he's actually usually described as a very cautious, calculating guy.
Yeah.
But here he is getting totally swayed by someone he trusts. So what do you think is the big takeaway here for our listener?
Well, I think this really highlights just how crucial self-awareness is, especially when it comes to things like trading and investing, because we all have biases,
Right.
whether we realize it or not.
Absolutely.
Things like confirmation bias can lead us to just seek out information that just backs up what we already believe,
Right.
even if those beliefs are completely flawed.
Oh, yeah.
Or loss aversion.
Where the pain of a loss just outweighs the pleasure of, an equal gain, right?
Yeah.
And that can make us hold on to, losing investments for way too long.
So even a seasoned trader can trip up on some of these just ingrained psychological tendencies?
Totally. It's not just about knowing the market. It's about knowing yourself.
That's such a good point. And, it's not just individual biases that can lead us to make bad decisions, right?
Yeah.
Our source material actually goes on to describe how, a whole bunch of traders on Wall Street at the time, they end up losing big because they're trying to force the market to pay for their, extravagant lifestyles.
Oh, I've heard of this. Yeah, the desire for quick riches can just be totally blinding.
Right?
He tells this story about this, it's almost absurd, about this fur coat craze that swept through a whole trading office.
Wow.
These guys are dropping tens of thousands of dollars on these luxury coats before they've even earned the money.
Oh my gosh.
Talk about letting emotions drive your decisions, right?
Oh yeah, that sounds like a recipe for disaster. So, what's the lesson here for our listener in 2025? Are we saying don't buy a fur coat?
Well, maybe not specifically fur coats, but definitely be really aware of, the danger of what we call emotional trading, whether it's FOMO, that fear of missing out, that drives a buying frenzy, or panic selling when the market takes a dip.
Right.
Letting your emotions dictate your actions, it rarely ends well.
That makes a lot of sense. So we've got self-awareness, emotional discipline. These are two key takeaways so far.
Yeah.
But then our trader gets hit with another major setback, right?
Yeah.
Bankruptcy.
Yeah, and it's a mix of different things that contribute to his downfall. There are unfavorable market conditions.
Right. Which nobody can control.
Right, exactly. But then there's also this recurring theme that we've seen of his judgment being clouded by personal favors that he's doing for people.
So once again, relationships and obligations are influencing his decisions.
Exactly.
Just like with that whole friends analysis thing.
It seems like that tendency to mix personal feelings with professional judgment was a big factor in his downfall.
It's a cautionary tale.
Yeah.
For sure. But the story doesn't end there, right? He eventually makes a comeback.
That's right. He starts small, focuses on rebuilding his capital, with patience and discipline. He's learned from his mistakes, and he's determined to regain his footing.
And then comes this almost movie moment where he gets this telegram summoning him back to New York.
What?
And it's super cryptic.
Oh.
It just says, come to New York. Leaves us all wondering what what is awaiting him?
Right. Like, what is this about?
Exactly.
That's so interesting.
So we'll have to dig into that in part 2 of our deep dive.
I can't wait
to find out what this intriguing proposition is all about.
Yeah. And what are the motives behind it?
Exactly. Stay tuned. We'll be right back.
Yeah.
All right, so we left off with our trader getting this mysterious telegram calling him back to New York.
Yeah.
And turns out this guy, a guy named Dan Williamson, is offering him a chance to trade in this, like, really prestigious firm with a $25,000 stake.
Wow. That's awesome.
Which is a lot of money back then.
Oh, yeah, absolutely.
But here's where it gets kind of like a little too good to be true.
Okay.
Williamson's like, yeah, you don't have to repay this money until the account grows to like some ridiculously huge amount. It just seems a bit odd, right?
Yeah, it definitely raises some questions about like what his motives are.
Right.
You know, it's pretty clear he's not just being like charitable or something.
Right.
The source material kind of hints that there's this whole calculated strategy going on.
And that's exactly what it turns out to be.
Yeah.
Williamson has this ulterior motive.
Oh.
He wants to use our trader's like reputation to kind of cover up some massive stock sales that his brother-in-law is making. So how does that even work?
Okay, so basically it's using a fall guy to create this smoke screen in the market.
Okay.
So imagine you need to sell a ton of stock, right?
Yeah.
If you just dump it all at once, it's going to spook everyone, drive the price way down. You're not going to make as much profit.
Right.
So what you need is a distraction.
Okay.
Someone else making big trades that pull attention away from what you're doing.
So our trader's being used as like a decoy.
Exactly.
To hide where this selling pressure is actually coming from.
Yeah, by having him do all these high volume trades, it creates all this confusion. It makes it really hard to connect the dots back to Williamson's brother-in-law.
So at first, it seems like our trader's actually benefiting from this arrangement, right?
Yeah.
He turns that $25,000 into over $100,000
Wow.
in just a few weeks.
That's impressive.
But then things get a little more complicated.
Yeah, this initial success starts to get overshadowed by this kind of growing sense of unease. Williamson starts putting all these restrictions on his trading.
Okay.
Like he's preventing him from making the really big profits that he could.
Because those big wins would attract too much attention to the firm.
Exactly.
And then people might start noticing what the brother-in-law's up to.
Exactly.
With his stock dumping.
Like he's stuck, right?
Yeah.
Because he's obviously grateful to Williamson for this opportunity, but that debt is also kind of a liability now.
Right, it's limiting his potential.
Yeah, and this raises a really interesting question for, you know, anyone listening.
Yeah.
When does gratitude become a hindrance to, like, achieving your goals?
That's a good question.
You know, how do you balance loyalty with your own ambition?
It's like that applies to way more than just finance, right?
Right. That's like any field.
It's about recognizing those moments when a relationship might be holding you back from really reaching your full potential.
And it sounds like our trader eventually comes to this realization himself.
He sees that his success isn't really tied to the market anymore. It's tied to Williamson.
To what Williamson needs, yeah.
Yeah. He's basically become a pawn in this whole scheme.
It seems like it.
And I'm guessing he's not too happy about that.
Probably not.
So what happens next?
Well, that's where we get into one of this trader's like strongest beliefs.
Okay.
His absolute aversion to tips.
Interesting.
And how that ties into this whole growing disillusionment with Williamson.
Okay.
And this need to like take back control of his own destiny.
All right, I can't wait to hear more about that. Let's dive into all that in part 3.
That's good.
Okay, so we're back, and I'm really curious about this whole thing with our trader and his stance on tips. You know, in today's world, it's like everyone's always looking for that hot stock tip.
Right.
Yeah. But this guy, even way back then, he was totally against them.
Yeah, it was like one of his core principles. Never trade on tips.
Interesting.
He thought they were unreliable, usually self-serving, just totally disconnected from like the real forces driving the market.
And he wasn't just talking. He actually tells this pretty funny story about his own wife.
Oh, really?
Yeah. She buys stock in this company called Borneo just because someone at a dinner party was raving about it.
No.
And of course, it totally backfires.
Yeah.
The stock tanks, and she loses a bunch of money.
Oof. Classic.
And this just like solidified his belief even more that tips are often, you know, for someone else's benefit, not yours.
Totally. Like the market doesn't care about your social obligations or who gave you the tip. It operates on its own logic.
Right.
Driven by all these complex factors way bigger than just, you know, someone's gossip.
But here's where things get really interesting. Our trader didn't think that like all price movements were manipulative. He knew that sometimes there are genuine reasons why a stock goes up or down.
Right.
Reasons that have nothing to do with, insider schemes or whatever.
Yeah.
And he gives this example of shorting Bethlehem steel. Now, short selling can be really risky.
Right.
But he noticed that Bethlehem steel wasn't rallying when all the other steel stocks were. And that seemed weird to him.
Yeah, that's a good catch.
So he thought, okay, maybe there's something wrong with this company. So he goes against the trend, basically.
Oh, wow.
Just based on what he's seeing in the price action. And he was right. News comes out a little while later that confirms his suspicions, and the stock price drops.
That's awesome.
It just goes to show you how important it is to be observant.
Right.
To recognize patterns, like those things that seasoned traders develop over years.
Like being a detective almost, right?
Exactly.
Looking for clues and how the market's behaving.
But then he also gets into this kind of darker side of that, which is deliberate misinformation.
Oh.
He talks about how insiders can actually use the lack of news to their advantage.
Interesting.
It's like the art of silence, withholding information on purpose to manipulate how people see things. He gives some specific examples of how these insiders, while they're secretly selling off their stock, would then blame these like mysterious bear raids for the price going down.
Oh, wow. That's sneaky. So how does that work? Like, why do people fall for that?
I think it's fear and uncertainty.
Right.
Especially during like a market downturn.
Yeah.
People want an explanation for what's happening. And when there's no official news,
right,
it creates this vacuum that gets filled with rumors.
Of course.
Blaming it on these like shadowy bear raiders gives people like a simple narrative.
Right, an easy answer.
That distracts them from what's really going on, which is that these insiders are cashing out.
So it's not just spreading like false info, it's also controlling the narrative by like holding back the truth.
Exactly. Reminds me of that saying, sometimes the most important thing is what's not being said.
Oh, yeah. That's a good one.
And that's something for our listener to really keep in mind, especially with all the information overload we have today.
Totally. You got to develop a critical eye. Learn to see through the noise and find the patterns that actually matter.
Right.
Because what you don't know can be just as important as what you do know.
And all of this leads up to this pretty shocking story about the collapse of the New Haven Railroad.
Oh, yeah, I've heard of that one.
The company's insiders, they just kept denying that anything was wrong.
Wow.
Assuring everyone that everything was fine. But the stock was plummeting.
Yikes.
And people just held onto their shares because they believed what they were being told.
Amen.
And then they lost everything when the truth finally came out.
Wow, what a mess.
It's a good reminder to always question assumptions, right?
Absolutely.
Especially when people in power have something to gain.
Totally.
But keeping up a certain story.
You always got to think for yourself.
So we've covered a lot today. I mean, from self-awareness and emotional discipline to the dangers of tips and, how information or the lack of it can be used to manipulate people.
It's a lot.
It seems like these lessons from this early 1900s trader are just as relevant today
for sure.
as they were back then.
Absolutely.
But there's one more thing I wanted to touch on, which is that our trader, he actually admits to being a manipulator himself.
Oh, really?
Yeah.
Yeah.
So how does that square with everything else we've learned about him? Like, he seems to have a pretty strong moral compass.
That is interesting. Yeah. How does he justify that?
Well, he doesn't really shy away from it. He sees manipulating stock prices as just part of doing business.
Okay.
Like it's a way to move large blocks of stock without, messing things up too much.
Right.
But he stresses that he's always transparent with his clients. Make sure they understand that these price movements aren't, totally organic.
Oh, so it's not about like deceiving people for his own personal gain.
No. It's more about using his skills and knowledge to get a specific outcome.
Right.
While being upfront with everyone involved.
Okay, so he's like playing by a different set of rules, but he's still being honest about it.
He calls it his line of least resistance philosophy.
Okay.
So basically, it's about working with the market's natural tendencies.
Yeah.
Understanding how the crowd thinks and kind of nudging prices where you want them to go.
Okay.
Without having to resort to like brute force.
Yeah.
Or outright deception.
I mean, it kind of sounds like he's playing chess with the market.
Right.
Yeah.
Strategically moving pieces around.
And he gives an example of this.
Yeah. He tells this story about working on Consolidated Stove. He's trying to pump up the price as a favor to a friend.
Oh, okay.
But it quickly becomes this huge logistical and ethical challenge.
Yeah, I bet.
He has to balance helping his friend with what the syndicate wants and still stay true to his own principles.
Yeah, it's a tough spot.
It really is.
Yeah.
And then to make things even more complicated, his friends, because they know what he's doing, start buying up the stock. Yeah. Which drives the price up even more.
Oh, that's ironic.
I know, right? It's like his attempt to manipulate the stock is accidentally being helped by the very people he's trying to protect.
Wow, so even his carefully laid plans can get messed up by stuff he can't predict.
Exactly. It just shows you that the market can be totally unpredictable.
Well, that's a good lesson to end on.
So, for our listener today, what do you think is like the big takeaway from all of this?
You know, I think it really boils down to this. Human psychology is what drives the market. Even after all these years, right? The same patterns of greed, fear, and, the hope of getting rich quick that were happening back then, they're still happening now. Wow. Understanding those things, realizing they don't change, can give you a real advantage in the market.
Whether you're a pro or just starting out.
Totally. It's about remembering that behind all the charts and algorithms and news headlines, there are still just people making decisions based on the same emotions and biases that we've always had.
So as you navigate today's markets, remember what we've learned from this trader. Be self-aware, be skeptical, be observant, and never underestimate the power of human psychology.
Words to live by.
That's all for this deep dive. Thanks for joining us.